This TFMR podcast is brought to you by Cyber Metals, a new digital precious metal platform from your friends at JM Bullion. Visit cybermetals.com for more details. Hello again from TF Metals Report, and welcome back to your latest TF Metals Report podcast highlights for the last week of March 2023. Of course, a daily podcast summary is just one of the things you receive as a member of TF Metals Report. It's only $15 a month. It's about 50 cents a day. You get a morning summary of all the latest news and events and things that are moving the metals. And then you get an afternoon podcast if you'd rather listen to what's going on as you're on a treadmill or driving home from work. These little snippets that you get in your podcast highlights are just a small fraction of what we discuss every day. For example, on Monday, March the 27th, we were checking out all kinds of charts as we were moving toward the end of the month and the end of the quarter. Gold has moved up sharply over the last 3 weeks, and now it's running into resistance at the psychologically important $2,000 level. So that chart, the chart of COMEX Gold, was just one of many that we discussed on Monday, March 27th. Gold on the daily chart. Again, now I've moved this to GCM, M being the month signifier for June. We're still technically using the April as the front month till that contract goes off the board on Thursday. But really, with 2 days to go, I think we're up to 330,000 contracts of open interest already in the June. So this is where the action is. And you can see the same ladder levels. 1960 is the support now. 1963 was today's low. We got to get above 2,000, but really a close. You'll know we're starting to cook when we get a close up here above 2020, above those three candle wicks that are sticking up over the last 6 or 7 days. All right, so those are what we'll be watching. I don't know if we'll get there. I really would be surprised unless all hell breaks loose if we get there this week. But this will be the levels, 2020 to 2040, that'll be key when we do finally break out. You may be familiar with the format we call a Thursday conversation. It's that one podcast all week. We usually bring in an outside expert, longtime friend perhaps, to share that person's wisdom and insights about where we are with the precious metals and the markets in general. This week we did that on Tuesday instead of Thursday. And the guest was Jason Barak, who runs his own fabulous YouTube channel and website called Wall Street from Main Street. Jason had reached out a couple weeks ago and said, have you seen the news about these Fed swap lines, these dollar swap lines that the Fed and the other central banks have reopened since that banking crisis earlier this month? And I said, yes, I've seen that. And Jason said, I know a lot about that. How about, can I come on to your channel and talk about it? I said, that'd be great. So go to the TF Metals Report homepage. You'll find that link by scrolling down. It's a Tuesday conversation. You'll want to listen to the whole thing. You're going to learn a lot. Here's just a small fraction of what Jason and I discussed in that podcast. Is there significance, Jason, to this making them daily maturities versus weekly?
The Fed actually has really bad balance sheet problems. So if the Fed actually had to adhere to generally accepted accounting principles and they were being audited, the Fed would be deeply cash flow negative. Right. So actually, the Fed is getting hurt with these higher interest rates. So the narrative is they're fighting inflation, but they're actually, because there's so much cash from the banks over the last 12 to 18 months, they moved so much cash to reverse repo, and there's so much cash at interest on excess reserves. The Fed's actually deeply cash flow negative. If the Fed had to adhere to generally accepted accounting principles, they would have to market their bond losses, because basically any entity that's not a large U.S. bank, not connected to the federal government, not the Federal Reserve Bank. So and I've interviewed someone who owns in the last couple of days on my YouTube channel, Ted Oakley. He's a large investor. I think he owns a large percentage of a regional bank. And he was talking about how their accounting, they have to market all their bond purchases and securities purchases. Well, if you're a large bank like JP Morgan or the Federal Reserve Bank or the US government, you don't have to do that. So I suspect this is because there's failings with a lot of the European banks. I think that's where the problems are occurring first, and the Fed is just worried that it will spill over into the large banks that are connected to the European banks.
Silver has been moving up sharply these last 3 weeks too, in a great short squeeze. It's similar to the ones we saw last year. There were 3 or 4 in the fourth quarter of last year that were all 10, 15%, and silver is doing the same thing now, squeezing the smarty pant hedge fund shorts and it's been a very nice rally. One of the things we discussed Wednesday the 29th was how silver was pressing up against a very important resistance level near 2350. 2350 had been support in December and January, so you'd expect it to be resistance now, and that was all part of what we discussed, again, Wednesday the 29th. Okay, silver. What's silver up against? Well, you know this. Again, finally getting away from its 50-day. Above the 23 level, which was resistance and is now clearly support. Butting up against 2350, which was support for 2 months and is now clearly resistance. What's today's high? 2355. Get above there and close above 2350. Then there's a very high likelihood of 2450 or even intraday 25 in relatively short order. Now, maybe that implies that that dollar chart is going to break down through 102 and go to 101. And if the dollar goes to 101, then yeah, silver's probably going to 2450, 25. So you can see how these charts sort of correlate. If you follow the precious metals, then you likely know that changes to the dollar index often impact the daily trading of the precious metals on the COMEX. If the trend is down, either intraday or long term, that's usually a helpful, maybe wind at your back for COMEX gold and silver. If the trend is up, it's kind of a headwind. So we got to watch the dollar closely. We watch it closely every single day at TF Metals Report. And that was one of the charts that we discussed Thursday, March the 30th. All right, I have something interesting to show you here on the dollar index. First, the current downtrend that stretches back to the Powell peak, if you will, March the 7th or March the 8th. And clearly, I mean, that's the downtrend line. Okay, getting to a moment of truth against 102 as soon as tomorrow, Monday at the latest. But what I want you to see is the red line and the green line. What's the green line? That's not the 200-day moving average. That's the 20-day moving average. Like like 20, 21, sometimes 22 business market days in a month. So think of this as the last month of prices as a moving average. Short-term traders often look at the 20-day moving average. Okay? Notice in the upper left, early November, when the dollar was already starting to break down. Notice that the 20-day moved down through the 50-day in a little bearish cross, and look at what immediately happened. 2 major red candles. Now, I'm not saying that's in store for tomorrow or Monday or Tuesday. However, you might note that we're about to get that cross again. Just kind of put that somewhere in your mental breadbasket. And Friday, March 31st, brought the end of the month, but also, even more importantly, the end of first quarter. And COMEX Gold posted a very important milestone by closing at about 1,987. It eclipsed by almost 2% the previous all-time quarterly closing high. And that's very important. May not sound so like a big deal for a short-term trade, but for the long-term traders, the generalists, the people that are searching for bull markets to invest in, a new all-time quarterly high is a very important milestone. And that's what happened on Friday. Of course, the new quarter begins on Monday, and we'll see where we go then. But as we wrap up this week and wrap up the first quarter of 2023, everything is proceeding along the plan we laid out in our annual Macrocast. If you want to find that forecast, it's free for everybody to read. It's been posted since the beginning part of January, right at the top of the TF Metals Report Twitter feed. So go to @TF Metals on Twitter. It is the pinned tweet on my profile. And man, the way things are playing out so far this year is almost exactly as we thought they would when we wrote that 90 days ago. So please check it out so you have some idea where I think we're going from here. I know where we're going from here will also be another one of these TF Metals Report podcast highlight shows next week. Holiday shortened week. Only Monday through Thursday, with the Good Friday holiday having U.S. markets closed next Friday. But come back next Friday anyway for your next edition of the TF Metals Report podcast highlights.